G'day folks, welcome back to another update for gold and silver. Now they both break higher on the shorter time frame, on the 1 hour time frame, so we might see a bit of a slight pullback in the short term. First, looking at the outlook, as of today, January 16, gold price are around $26.90 per ounce, reflecting a 27% gain in 2024. The market is influenced by US inflation data and Federal Reserve policies, with higher inflation potentially reducing gold's appeal due to anticipated interest rate hikes. The silver has breached $30 per ounce, having risen 22% in 2024. The gold to silver ratio stands at 90-1, suggesting potential for silver appreciation. Market dynamics are shaped by industrial demand and economic indicators, with technical analysis indicating a bullish trend if prices maintain above key support levels. So first looking at the gold price, and we always look at the long-term trends first off. So we've got the monthly, the weekly and the daily. And what we look at is these moving averages. And for those new to the channel, we've got these moving average videos, how to draw the moving averages in the videos below in the description. So reference those after this video. But basically what we look at is when the price is above those moving averages and also the CCI 150 is above the moving averages, we go in that direction. We go, in this case, we go long. This is the monthly, we go long. Now in this case, the monthly is just about, looks like it's touching that moving average range. So probably carefully going long at the moment on the smaller time frames. So on the weekly, notice we had also a bearish divergence here, lower highs on the CCI versus higher highs on the price. And again, we only go long on the weekly if you're trading on the weekly in the direction of the monthly. But notice at the moment it's in a bearish momentum with the CCIs breaking to the downside, so we avoid going long, even though the price is still above its respective moving averages. That's giving us a weakening signal. So we might see further declines possibly in the coming weeks. Now we did have a bearish divergence, as I said, lower highs on the CCI versus higher highs on the price. And what we do, if I expand this, we take it back to the significant low before that divergence started. You can take it back to that level, and you can see there that's where that 23-38% initial target range, and that 23-38% is hit more than 90% of the time. And you can see there it hit it, then it bounced and it's been going sideways. Alternatively, you could take it down to the next level as well, and it's still just kissed that range if you're going to measure on a 23%. So we take it back to the previous low before that divergence started to be more accurate. But at the moment, the weekly is bearish with the CCI hovering below the moving averages. So just be caution about going long at the moment. On the daily, now it's been fluctuating in this range now between a support at 25.66 and a resistance at 27.26. It's been fluctuating in that range. Both the price and the CCI moving average has been fluctuating above and below. But at the moment, if you're trading on the daily, remember we always go in the direction of the higher time frame. So avoid going long at the moment, or if you're going to do it very, very cautiously, but I would not be trading at the moment going long because of the weekly showing a bearish movement. So at the moment, showing a bullish movement on the daily, and we might see further upside slightly if you're going to basically you're gambling if you're going to be taking this side, although there's never a guarantee. It might be reaching this resistance possibly, so we'll keep an eye on that. Now if you're trading on the intraday, I've got the 1 hour here as an example. We go in the direction of the daily, so here you would have been going long during this period since our last video. A couple of little false breaks there, and it depends on where you put your stop loss. You can see there another break there. And if you're going to measure that, you enter when the CCI is broken above the moving average and also the price, and you close it when the CCI breaks into that moving average range. So you would have made a very small gain on that, just a few pips. Another entry would have been at that point there when it broke above. Let's see what this did. So you would have entered at that point and you would have closed it out when the CCI broke into the moving average range. So you would have made a 0.22% gain on that, or it's about 11 hours worth of trading. And lastly, you would have entered another lot there, and you'd still been, actually you would have closed it out at that point, and you would have made 0.17% gain in 9 hours of trading. So little gains, but again, don't be greedy. Now you could trade and wait for it to break into the moving average range of the price chart, but notice what it does. It often, you'll lose a lot more profitability generally if you wait for that to happen, whereas the CCI gives you an earlier exit. Then looking at the spot silver price, so on the monthly, it's just actually broken into that moving average range. It was bullish for a number of months since March 2024. It's finally broken into that moving average range. Even though we've got a bullish candle this month, the CCI is giving us a caution to be about going long, not to go long. On the weekly, got a few things happening here. We did have another bearish divergence, lower highs on the CCI versus higher highs on the price. The price pulled back, hit our 23-38% target range, and it's been hovering in that range since November 2024. So it's been in that way for a number of months now, a number of weeks. But notice the CCI is still dropping, and it's still in a bearish momentum on the weekly. If you look at the daily is actually, again, been hovering above and below that moving average of the price, likewise the CCI. But at the moment, notice it's actually, remember, we only trade in the direction of the higher time frame, so you only take short trades on the daily if you're trading the daily, and you would have taken the first short trades would have been around about the early November period, 11th of November, so that would have been around this period somewhere here. So you might have gotten in there, for example, when the price broke below the moving average and the CCI was below the moving average, and you would have got out of the trade when that CCI broke into that moving average range on that candle there. That would give you just under 4% gain in 13 days. Another short entry there. This one would have been a loss, if depending on where you put your stop loss. Another short entry there, and that would have been open at that point there, and you would have closed it out on that candle at the close of that candle. So that was a 2.4% gain in 10 days, and then another little stop loss there, or break even, or a stop loss there. Avoid going long or short at the moment because the weekly's in a bearish move. Now if we go to the intraday chart, again based on the daily, we take long positions only. On the hourly, so you would have taken your first long position at that point there and close it out at that point there when it broke into that moving average range. That was a 0.33% gain in 12 hours. That would have been a false break. Another long entry on that one. Another close out there. That would have been a small loss if you got out of that one there when it broke into the moving average range. Another entry there. Oops, let me just get rid of that. Another entry on that big bullish candle, and you would have got out on that one there. You would have made 0.92% gain in 11 hours of trade. At the moment, avoid going long because the CCI is broken into that moving average range. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.